3, 2, 1, and we're live here and now at 7:13 a.m. Pacific Standard Time. How about that? How about it's also a Sunday, and more importantly, it's 2/27/2011. There's the S&P daily chart, MMTs. So when we look at the S&P and the MMT platform, we want to be very coherent to the price action and where failure was, and also what was a key public psychological driver. What was their psychological driver? Okay, so by understanding MMTs, what the public driver is, and you as a market maker, well, then it makes you a much more wealthier individual within the transaction model. However, it's very important to understand weakness and strengths within indexes. As we have currently been stating for a while that we were a little bit overbought, not just a little bit, but we're going to go right back over here in this daily chart right here on the S&P 500 where the move all started. And each one of these are a half delta movement MMTs, and that is 6.63, and that will also be part of Monday's trading. Right now I'm going to hit 30 deltas. There we go. There, I priced it all the way back down. Public models at these half delta lines, and establishing the momentum of any index and or equity action price movement is the key to making higher profits. So therefore, it's very important that that is what our primary focus always is. Because once our primary focus is adjusted to that very element, then you get very good rewards, and that means that your pay salary goes up tremendously as an MMT market maker. So the very important thing that we're gathered here right now is to understand that we had the daily reversal, and it started with the gap down, it started with the oil, but we hit right down here in that half delta line in our platform. This does not lie. This was already pre-calculated long before any event or anything would come, and these are Monday's prices to start with. So the thing about it is that when we look in the delta format, we can tell that the low down here, like I said, around that 1296 handle, and when we get down there and we start looking at what that handle looked like, that's between that two full deltas down on the S&P 500, which was 26.54 handles to price to that delta of 1293. 1290, 1 1/2 delta is negative 19.9, and then we are going to show you where the current price level was. So the S&P 500 closes at 1319. So when we look up on the other end of the S&P 500, we can clearly see right here that we have gone from the negative ratio where we always look to buy on that daily level from the first major gap down price action reversal to the delta line. So we get to the delta line, you can see the rapid increase. That's where the buyers were stepping in. You see this daily bar on the upside is taking out the previous half daily bar down. And that's all in your beautiful platform. It's down here, right here. These are your instruments and your gauges to the price action. So what we're going to establish is the immune system to that price action. Where is it? What is its pulse rate? Is it strong? Is it weak? Or is it medium? Well, that's what we're going to talk about right here, right now. So as it stands from that delta retracement up, and that direct, you have the same direction. It starts with the gap down. That's the key, though. And you can see the daily distribution. It's the first little bit of a reversal fear that we've seen. Not nearly as in depth as this overbought cycle was. And they last for 1 day and they keep chugging right up the ladder here. So this one is going to get made when we basically get above half of this line right here. 1322.11 is a half bar. When I close and consolidate above there and then break higher with a large green breakout bar that takes out all of these other bars by half increments on the way up. What we would be looking for, MMTs, is an increase across the board in your immune system readings. And what would that be? Higher elevated IR for a period extended time and or days. Okay, these are all days right here of coming up off of the bottom and where the intraday ranges were closing up toward the high, and that's a very important thing to do, because basically what you're looking at is just this piece of it. You're looking at the negative ratio gap down MMTs, because what happens is, we talked about yesterday on Saturday about, you know, how does weakness build? It doesn't just happen on a second, but rather over a period of time, if the negative ratios continue to stay in that de-elevation, that means down, not elevating up, de-elevation, de-escalating, descending, losing IR premium equals weakness for the short side of the market until they finally stop going down. And that's what happened here on the daily S&P. We're popping now on the upside. Like we said, we would come down so many deltas. 8.33, it just so happens to be the new one. But 1, 2, 3, 4, 5, 6 times 8 is over 48 handles. That's a nice short. It only, now we've started a new a counter delta to the reversal delta. The upside delta is going to establish this very bar right here at 1322. Yeah, we close at 1319.88 and whatnot, but we have to close above and consolidate and then get above this delta line and start consolidating a new move up toward the high of that delta reversal bar down is up in here. And then we would break higher, because once again, the weakness for 3 good days are there, and it's 3-to-1 ratio. 3 down days in the negative ratio, and then coming off of the negative ratio, because that's where the buying happens, is down here. 2 full deltas, 1.5 deltas down on indexes, and how accurate we were. So